Hello and welcome. You're catching us live from SBI Live Studios, and this is Closing Trade. I'm Shrishti Sharma, and with me is Snehi Shah. And Snehi, seems like a good day for the markets, though the fact remains that at one point in time we did touch that 25,000 mark. We are off that mark for now, but Nifty Bank is still holding strong with almost 300 points of gain and no taking the eyes off from the IT space.
Well, absolutely, Shrishti. So lots of sector churn has happened once again. You have had autos that have been doing so well so far. They're in the backseat today. Top sectoral loser is Nifty Auto today. But other than that, if you look at the positivity in the market, even though we're off the day's high, we're still around that 24,950 mark, which is incrementally higher than when we had started for the day. So at least that is holding on to some strength, looking good on that front. Let's see, 1 hour of trade left. If you're able to touch that 25,000 mark again and scale higher from there on. Sensex 2, 0.3% higher. Nifty Bank, of course, was 0.8% higher at one point, has fizzled out slightly, but still a very healthy 300-point uptick coming in on that front. India VIX, we're seeing a further cool off about 1%, 10.6 thereabouts is where the India VIX is. What is doing very well in today's trading session is the broader end of the market. A 0.7% uptick coming in on the mid-cap space. You have Nifty small cap also that's doing pretty well for itself. A 0.6% uptick over there too. In terms of sectors, like Shrishti was mentioning, IT, OFSS on the back of its parent doing very well in terms of quarterly earnings, persistent emphasis, Coforge. So it's really these mid-cap IT names that have charged up the overall IT space, because you do have Wipro, HCL, TCS, Infi, all of them in the green as well. That followed by PSU Bank, so some strength regaining over here as well. Realty, energy, banks, FMCG, pharma, with pharma and metal slightly on the flat line, but on the flip side, deep pressure coming in on Nifty Auto. So that is what our trade setup is looking like right now. On the back of that negotiation that is now open, as hinted by PM Modi as well as President Donald Trump, they're going to be looking forward to working out the trade deal on that extra 25% tariff on India. So that has sparked hopes once again for the textile sector today, with names like Welspun Living up 10%. You have Vardhaman Textiles also up 6%. Trident, Gokuldas, all of them are doing very well, as is the case with Avanti Feeds today, because the export negotiation is now open, and also on the back of that, EU news coming in wherein they have certified 102 companies from India as export potential companies. So very positive move coming in on Avanti Feeds. These are some of the top gainers in today's trading session. Almost a 16% uptick coming over here as well. So that is what the market setup is looking like right now. Let's get into conversation with Deepan Mehta, director at Elixir Equities, on the fundamentals and on the technicals. We also have Kunal, who's joined us in the studio. So good afternoon to both of you. Deepan, let's come to you first. The kind of move we've seen today, we've managed to hold on to some bit of it while we fizzled off from the day's high, but 25,000 still doesn't look all that far. Now, in the backdrop of these tweets coming in early morning that Trump and Modi are both open to negotiation, where do you think the market could head from here? And is this finally the fillip that the market needed to get out of this, near-term range that we've been seeing?
Good afternoon, and thank you for having me on your show. Yes, I think that if a favorable trade deal is concluded, then it will be a sentiment booster and just the trigger required for the market to move out of that very narrow trading range it has been in for so many months. But end of the day, I don't think fundamentally it will impact a large number of companies. As when the trade deal did come through, it did not impact a large number of companies because exports to US, especially listed companies, were impacted by the tariff which I imposed just now, a very few. So it's just a sentimental effect. I don't think it'll have much of an impact on the corporate earnings. But right now, I think what the street is really focused on is whether in this particular festive season, we will see an improvement in the earnings growth rate. The reason the market is pinned down is because earnings growth is not coming through. And now many measures have been taken to boost earnings growth, and we need to now finally see whether the earnings actually go up, and that I think only can take the markets higher. Of course, markets not correcting because of the huge surge of liquidity coming in from retail investors, but how long that will also last is questionable. But most importantly, I think the eye has to be on earnings growth.
All right, so that's the take coming in on the markets. But Deepan, one such sector which is expected to be the biggest beneficiary of the GST reset is actually the auto space. We have already seen very good moves, but today it's the top sectoral loser. Deepan, do you think that one should take this as an opportunity to maybe once again and make a re-entry in select auto counters, or rather, do you believe that they have run way ahead of their time?
No, I still believe that we should be overweight auto companies, and with usual disclosure that we and our clients are interested, invested. Entry level companies like Hero Motocorp certainly are far more interesting than some of the peer group companies. The valuations also are reasonable, and with rural demand expected to pick up, that's one company which can benefit. So the two-wheeler Hero Motocorp and Aisha Motors, of course, have been an all-time favorite of ours. These are the two companies to consider. And in the four-wheeler side, very, very positive on M&M. Again, disclosure required over here. So I think investors should be overweight the auto industry. Definitely, we are expecting a nice improvement in the volumes across the board. And even if you have shares in other companies, I think whether it's Bajaj Auto or TVS or Maruti, I think the entire sector should do pretty well over the next few quarters or so. Raw material costs are benign, and I think the auto industry, all of them, will take this GST cut opportunity and put in everything that's required to boost their sales. And who knows if they get volumes which are in double-digit growth rate, then that could be a big fillip to the bottom line of these companies.
Still optimistic on autos. That's the word coming in from Deepan. Deepan, hold that thought. We'll just focus on India's macros for a bit right now. And Fitch has upgraded India's FY26 growth outlook to 6.9% from the earlier forecast of 6.5% on the back of strong domestic demand outlook. Fitch has also cited GST reforms as a key trigger behind the upgrade, as it expects the rate rationalization move to boost consumer spending over the remainder of the current and next fiscal year. Let's go across to my colleague Ankur, who's waiting by with the rationale behind this upgrade coming in from Fitch. Ankur.
Yes, Fitch has now upgraded India's forecast for FY26 to 6.9% versus 6.5%. Remember, even Reserve Bank of India has a forecast of 6.5% for the current fiscal year, and that has remained unchanged even in the last monetary policy. Now, after that, Q1 GDP numbers came at 7.8%, which was at least 1 percentage point more than the highest of the expectations, which were around 6.8% earlier. So, all in all, what Fitch is saying that with the fears of tariffs now being less, and they are expecting it to be 25% now against 50%, there is a chance that India may grow at 6.9% for the current year, and they see GST reforms modestly boosting the consumer spending for FY26. They have given it as a rationale. As far as the fiscal impact of GST is concerned, they are considering it at 0.2% in their report, and more importantly, they see Reserve Bank of India cutting repo rate by 25 basis point in the current fiscal year, and that is important because Reserve Bank of India has already done a front loading of 50 basis point in last to last policy, and they want to wait and see the effect of it. And more importantly, now the looser financial conditions will feed through investments, and Fitch also believes that domestic demand key driver of growth on consumer spending, and that is the expectation, which is from 22nd of September, whereby the rationalized rates of GST will be applying.
So much, Ankur, for getting us all those details. So that was Fitch rating on their India outlook. But with this, it's time now to slip into a very short break. Don't go anywhere. Lots more to talk about on the other side.
Back with closing trades, and you're catching us live from the SBI Live studio. You're watching us on ET now. The sector that we were talking about that has been buzzing and has all the spotlight today is the entire IT pack. And we caught up with Sandeep Tandon, the CIO at Quant Mutual Fund, and he believes that the Indian IT sector has the potential to outperform in the next 6-month period. Let's go across and listen into the rationale behind his view.
We have been very bearish on IT for a while, and now if you look at last month fact sheet and last 1 month, we have built some of the IT exposure because they reached that desired neglected space where people have given up, and the noise was so negative that people were not even willing to talk about the technology names, and this additional worry on the taxes will be applicable in the services. So that could be the peak of this crisis which we saw last week. We have been slightly constructive now. I'm not saying that we are going all out and building a very large exposure, because I think earnings cycle is yet to bottom out. My own estimate is that maybe by September quarter, earnings cycle should bottom out, and maybe December quarter you might see first uptick in the IT space also, and hopefully by the time our tariff related challenges should also settle down, so it can be a sentiment booster. So negative news will be completely discounted, and maybe looking for earning upgrade under ownership is there, and if market moves up, I think this is one sector which has underperformed. So it has potential to outperform from the next 6 to 8 months perspective, or 6 to 12 months perspective. We have built exposure in the large cap IT because they are relatively more cheap. And most important thing in this challenging environment, I always say liquidity is more important than the returns. So mid cap IT maybe all looks very nice, but they are relatively illiquid as compared to the large cap name. And given the background, I think purely from a liquidity perspective, valuation perspective, and safety perspective, I think Indian IT large cap looks better than the mid cap space in general. But obviously there will be stock specific opportunity in the mid and small also.
Okay, and let's discuss that, because ever since yesterday when you got that announcement that Infy is going to be mulling a buyback, there's a lot of cheer which is spread all across the IT pack. In fact, today also, if you look at it, it's not just Wipro, HCL Technologies, wherein markets now have high hopes that perhaps after Infosys mulling a decision of a buyback, it could be Wipro or a TCS next. But TechM, you've got TCS holding up 2% right now. Infosys after yesterday's 4% move, it's another 1.5% in the green now. Wipro holding up 2.6%. But it's heartening to see that the cheer from the large cap IT space is now spreading its wings to the broader end of the mid cap IT universe as well. Look at a Coforge, that's holding up 4%. Persistent is higher by 5.25%. Tata Elxsi is up 5.5%. And Oracle Finance as well, higher by 9.5% as we speak. We've got Nagaraj Shetty as well joining in on the show, still in conversation with Dipan Mehta. But Kunal, since you were mentioning mid-cap IT earlier this morning, tell me, what is the trend that you foresee? Does it seem like today's move looks sustainable on the likes of Tata Elxsi, Persistent, Coforge, etc.? Because these were the same hands which were the stronger ones when last time IT moved.
Well, absolutely, yes, Aisha. In fact, we are seeing a very strong short covering move for many of these mid-cap IT names. So over the last 2 days, we've seen Infosys moving up hard. That's added strength to the overall IT index on a larger basis. But I think today's move, it started off with Oracle Finance, OFSS, moving on to Persistent, and then the likes of Coforge, etc., participating. I think that's boosted the confidence for the short-term prospects for the IT index. And I think with the short covering move which has happened today for many of these mid-cap IT stocks, there seems to be more legs which could open up on the upside for these IT names. So I would actually believe that in case, what happens is after such kind of a steep move, these stocks may just about get back into a bit of a time-wise correction. And if that happens, and in case these stocks drop down, say by a couple of percentage points, then I would believe that it could be a very good buy and dip strategy.
Dipan, are you convinced about IT just yet, or does it seem like this is just a tactical bounce from a completely ignored and unloved sector in the market?
No, I'm not. In fact, such buyback news, when they improve the sentiment and give us back to the share price, great exit opportunities. Investors still stuck in those stocks can certainly review their holdings over there and look at exiting. But selective opportunities will be there in mid-cap stocks, like Persistent is there or Coforge is there. I think Tata Elxsi is showing some light. Again, disclosures required for all three companies. So there will be selective players who will benefit and who will continue to grow at double digit or mid-teens. But large cap IT companies, I'm not so sure.
Okay, Dipan, not quite convinced, but our researchers put up the bull as well as the bear case scenario on IT. And in fact, we've got Sharad and Varun both joining us with exactly what the market is representing for the IT pack. But Sharad, you go first. What's the case that you're building up for IT?
Okay, so well, I would be the bull for IT sector and Sharad is going to be the bear, and let me put forward my first argument, that's the bull case. And see, for a Indian IT company, the most important thing is the US markets. And if you look in the US market, the most important thing now is the interest rate cut. And after the recent economic data, people are expecting an interest rate cut in the September policy and also going ahead. So definitely this will actually increase the overall discretionary spending, and that will impact the overall Indian IT sector. So that's my first point, and that is the US market and the rate cuts.
Well, yes, Varun, that's a good point you have raised. But do remember, Indian IT companies and the global companies, there's a difference. The global companies are product based. That's why they command a valuation premium in the markets. And no such premium is coming in for the Indian IT space, if you look at it. They are largely service based. So this is, of course, you could say this entire year there has been an underperformance also in the IT stocks. It's just been 2 days of growth coming in the IT space.
But if you look at the management confidence, it comes from the Infosys buyback. On the 11th of September, Infosys has a board meeting. They are going to decide on the buyback, and it's after a long time that our IT company is coming with a buyback that eventually gives confidence among the investors that yes, there is a lot of strength still remaining in the overall IT space.
Well, yes, for shareholders it is good, but for the industry, not major investments coming in when it comes to R&D and AI, and that also gives a question in the industry. Also, there's a lack of names coming in when it comes to the AI or even the semiconductor race. We do not have actually a proper semiconductor setup, and neither we are having a full-fledged AI company. We are having some integrations, smaller ones.
But if you look at the overall commentary of several global giants and also the new clients, they are actually promising. Look at the commentary of Oracle Finance. After the commentary, the stock has shown a good jump. Also look at the commentary of United Health, which is one of the biggest client of Persistent System. Also, brokerage houses have upgraded the stock. So if you look at the global scenario, it is actually improving.
Well, yes, the mid-cap space is actually improving, Varun. That's a great point. But the divergence is very big. First, you look at the Nasdaq. This year itself, Nasdaq is up 13%. And the Nifty IT index, I'm looking for gains, and there aren't such gains. It's 14% down.
That actually shows you that the valuations are cheap, especially if you look at the major IT companies, Indian IT companies, the overall valuation after the recent fall have actually become lucrative, and this is the right time to buy the Indian IT companies.
Well, of course, the valuations have turned cheap, but the earnings have not been that strong, especially the hiring trends. That has been confusion for the last 2 odd quarters, and a lot of companies haven't even given their guidance yet.
The hiring trends are not strong. Also, the results were not that good. But yes, the companies are now diversifying. If you look at some of the good companies like TCS, they have recently got an order of around 550 million euros from the European countries. So yes, US might be a problem that has created problem in the overall earnings, but they are diversifying, and that would be a big tailwind for these companies.
Well, yes, but US is creating one more problem, Varun, and that is the Hire Act. Of course, it's put out in the Senate. And interestingly, the question mark comes is on outsourcing. They are focusing much more on local labor. Right. And India is an outsourcing theme also in the export space. So that's a point which I was to ponder
upon. But actually,
upon.
That's a positive point for Indian companies, because if you look, the rupee is actually depreciating and Indian companies are actually exporting. So definitely they earn in dollars, and definitely this will impact the overall earnings of these companies, and it is expected that the margins from here are expected to rise also.
Well, yes, margins, there is a very good, strong tailwind coming in. But the revenue is something which I am concerned, because AI billings might be there, and that might concern the IT companies. The work which was done by, say, 10 people in a group can be done at 4 people now. So that might be an error as well. Okay. So there's a lot of confusion here. Short-term basis, of course, Varun is winning with his bull case scenarios. But long-term, should we be cautious for IT? That's a question which we are looking out for.
Oh, well, yes, absolutely, Sharad and Varun. Thanks for taking us through that. The street is out when it comes to Nifty IT, but the kind of performance we've seen over the last 2 days is indicating to some positivity. But Nagaraj, coming to you, let's shift focus from IT to the next best sector today, and that's PSU Bank today, up about 2%, with select names doing very well from this counter: Bank of India, Union, Indian Bank, Mahabank. What are you seeing for the PSU banks? How are these stocks shaping up, and what are your preferred bets from here?
Hi, Snehi, good afternoon. Thank you for having me. PSU banks were actually banking stock was in a downtrend recently, along with the banking Nifty as well. And today's upside bounces with the important bottom reversal in PSU banking index is indicating that there is a short-term bottom reversal for the stock price. And the stocks like Canara Bank, Bank of India, and the Maharashtra Bank are looking positive at this point of time for a reasonable upside potential.
We'll let you go on that note. I believe you've got to rush out, but good to have you in the show as always. We'll take a very quick break on that note, come right back. We'll continue discussing markets on the other side. Okay, just counting down to the AMFI data, while of course all of us equity watchers are awaiting those SIP datas, but just on a net basis, you have seen inflows more than half actually on a month-on-month basis, because it stands at about 52,443 crore rupees this time around, as opposed to a quantum of 1.78 crores on a month-on-month basis. The equity inflows, they also have seen a marked dip on a month-on-month basis, standing at 33,430 crore rupees versus inflows of 42,702 in the previous month. Total AUMs, that's largely the same, 75.2 lakh crore rupees versus 75.4. So I don't think there should be much of a degree of, or rather an aberration when it comes to the SIP data. And the equity AUMs, they stand at 33.1 lakh crore rupees versus 33.3 lakh crores on a month-on-month basis. It's only the net inflows which have seen an aberration both for equity as well as overall. Still got Dipan Mehta from Elixir Equities with us. Dipan, anything else that you've made a change on, either a view or actually taken position somewhere afresh or cut down anything?
Again, we are getting into disclosure zone. But recently there was news in the market about new professional CEO being appointed for Vadila Industries, which is India's third largest ice cream producer. And I think that after many, many years of a lot of challenges and infighting within the promoters, I think all of these issues have been resolved and they have a professional to manage the business. The brand is extremely strong and it has got great scope for expanding rest of the country as well. It's largely focused in the western region. And I think that amongst the FMCG space, ice cream is one of the least penetrated categories as well. And with improved power demand and stability of power, there's great scope for ice cream demand also to go up in the country. So we're very positive on this company. Having said that, it's a company in which we and our clients have invested, so our views are definitely biased.
Okay, so that's the view coming in and some of the stocks that Deepan is liking at the moment. Deepan, thanks so much once again for joining us and thanks for your time today. Okay, let's move on, and we also have Mr. Sunil Subramaniam, market expert, joining us on the show. We have the AUM numbers flashing and we also have the AMFI data flashing. We'll bring you my colleague Sharad on board soon with the SIP numbers as well. But before we do that, we have Mr. Subramaniam with us. And Sunil sir, give us your read-through of the kind of moves that we're seeing in the market right now. The trend of broader markets outperforming the benchmarks, it's once again back. What is your outlook on where there is more opportunity in the market right now? Is it towards the broader end, or should one still be playing it safe with the larger caps?
So actually, if you see, playing it safe with the larger caps is the word you've used, but I wouldn't say it's today's safe territory because, the FIs are the ones who've been selling. So actually, large caps have been under a fair bit of pressure because the IT index there, the banking index, they're all recently, because FI flows haven't come back despite the good news on the domestic front. It's the domestic flows which are holding up. And I think if you see the fund managers who get the flows, more than 50 to 60% of the flows is in the mid and small cap and sectoral funds. So consequentially, buying support is there for the broader market. So the broader market is a safer place, is the larger cap space, right? Which is today, because of the uncertainty around FII flow, that's a little more volatile. So it's a little bit contrary in what I'm saying. And so I would say that actually the recovery should happen in the larger cap space. So coming back to your point is that, yes, you should have a decent allocation to large cap, because you go by the latest news that we are all trending on today is Mr. Trump's rapprochement towards India, right? After his tweet saying that India has gone into the Russia-China corner, he's now backtracked. He's talked about his friendship with Mr. Modi, how he's a great prime minister, and he's going, the trade talks are going on. So if that's the case, and FIS, and yesterday, after a long time, FII flows turned positive 2,000 crores. So I'm saying that if this is a sign of the things to come, and with the Fed rate cut, 88%, 90%, 25 bips rate cut is factored in, it should ease more flows towards emerging market, and India should get its share, because our share in the emerging market index is almost 17%. From a passive perspective, at least flows should come back. So I would say that you should now diversify across large, mid, and small. Domestic buying support will continue, especially since GST, you have had the consumption pack show a sharp rally. There will be some profit taking in that space, but I would still say that from a medium term, it's the Indian economic growth which is still going to drive the markets, and that's probably my space then is capital goods and public sector banks, those which are domestically oriented. But when FIS come back, IT will be preferred. So there'll be a contra play there. And if the trade deal talks indeed are going to go through positively, then the export oriented sectors which got hit will probably be also showing a recovery. So today it's better to be broad based, not just across sectors, but also across the cap curve. I think that's the best and smartest strategy to be in today, because I do think that the FIIs have ignored the good news from India for pretty long now, and sooner or later there should be a reversion to mean, and they will start coming back into India.
That's about the flows, and yes, of course, we are somewhat playing that happening in the markets as well, because IT is indeed one of the top gainers when it comes to Nifty 50 sectoral moves. But yes, as we have been waiting by for the SIP data to trickle in, we'll try to find out whether or not we manage to scale past and sustain above that 28,000 crore mark or not. But before that, let's put the spotlight on the PSU banking space as well, because in the banking space, the PSU banks have outshined the private banks this year so far. But let's find out what are the key reasons for that. And for all the analysis and details, let's go across to my colleague Varun, who is standing by with that. Varun.
Well, so the PSU bank index is actually outperforming the other indices, not only today but also in the last 6 months. Let's look at the numbers. Today it is up by around 2%, but if you look in last 1 month, it has been almost flat, whereas the private bank index, the bank Nifty index, and also the BSE PSU index has actually declined. Also in the last 3 months, it has been the same case. Also in last 6 months, if you look, the Nifty PSU bank index has actually shown a growth of around 21.5%, actually outperforming the private bank index, the bank Nifty index, and also the BSE PSU index. Now, there are several reasons because of which we have seen this outperformance. First of all, it is the earnings, because if you look in the Q1, there has been decline in net interest margin and also asset quality across banking sector, but the overall performance of PSU bank was better than private banking sector. Also, if you look going ahead, there would be decline in net interest margin, but also you will see the overall cost of funds coming down, and that will come down more for PSU banks. That is what is understood among the analyst community. Also, with the CRR getting cut from September, you will see more liquidity coming into the system, which will be beneficiary for the overall banking sector. The GST rate cut or the GST rate rationalization that has been done will actually impact the overall economy. It would provide stimulus to the economy, and there is an ICRA report which says that it will impact the overall credit growth of banking system as well. Also, the downward repricing of deposit base will actually make banks more competitive when you compare to other debt capital markets. So this is one of the other tailwinds for overall banking sector as well. Also, if you look at PSU banking sector valuation, majority of the PSU banks or many of the PSU banks are still trading below the price to book value of 1. And if you look at the private banks, they are trading around 1.52. So the valuations are also reasonable, and the resolution plans of some of the companies like JP Associates will actually put some money into the kitty for PSU banks. So that would again be a benefit for PSU banks as well. Also, if you look at the credit growth, there was a time where the credit growth had actually slipped into single digit, but it is back to double digit, because if you look in the 3 fortnightly data of RBI, it shows the credit growth is actually back to around 10%, though it is double digit, but yes, low double digit, but yes, there has been a rebound, and PSU banks are one that would actually get major benefit of this revival in credit growth. So there are several tailwinds because of which you are seeing PSU banking index actually outperforming Nifty Bank, private banks, and also the overall PSU index, not only today, but also in the last 6 months.
Okay, that's that on what we're seeing within PSU banks, which, by the way, are in the limelight today. But But want to focus in on the AMFI data right now, and the SIP numbers are out. So let me quickly take it across to Sharad and get in what the individual classification performance has been like. And of course, after that, we will speak with Jayaprakash Toshniwal as well. But Sharad, you go first. What have been the sectoral flows like? What have large cap, small cap preferences been like? And what is the overall, SIP data indicating?
Well, the overall SIP data is indicating that the retail strength is still there. It is just a minor cut coming in if you compare it on a month-on-month basis. And the SIP numbers is still comfortably above the 28,000 crore mark. Now, looking at the overall numbers, the inflows that they have actually come down at 52,443 crore rupees. But do remember there is an outflows coming in from the liquid funds. That's why the numbers are looking less. Equity inflow that has moderated. Last month, the July was a record high equity flows coming in. But now there is a moderation coming in, but still it is above the 34,000 crore mark, and this is the third month in 2025 which is happening. So there is no cause of concern as such, but of course the AUMs, if you look at it, they are still near the record levels. Now there is a sectoral churn happening as per the analysis, except dividend yields. All the equity schemes have seen inflows coming in, but there are two major changes I'd like to point out. Of course, with respect to the large cap funds, over here the inflows have gone up by 33% on a month-on-month basis, while the small cap fund inflows that has significantly come down 23% on a month-on-month basis. Mid cap, however, has seen inflows of almost 3% incremental coming on a month-on-month basis. That means there is a moderation in mid caps, but yes, the mutual funds are clearly steering away from the small cap space. Now the sectoral funds, the major chunk blow coming in here, 60% downtick on the month-on-month basis when it comes to the overall flows coming in. But flexi cap, that has maintained its lead for the second straight month. There has been strong flows coming in. But the culprit has been the new fund offers, the NFOs. These NFOs have actually come down drastically, and that is why it has impacted the equity flows as well. But interestingly, equity segment still sees its 54th straight month of flows coming in. And do remember, only you could say 2,900 odd crore rupees of flows have come in the NFOs which were launched in the month of August. So NFOs, sectoral theme and small cap funds have seen a significant downtick on a month-on-month basis. But on the other hand, interestingly, large cap has seen strong flows coming in.
Okay, Shara, thanks for taking us through that. So those are all the SIP as well as your AMFI MF numbers at a glance. Let's get into conversation with Jayaprakash Toshniwal, the fund manager, equity LIC mutual fund asset management. And Mr. Toshniwal, hi, thanks for your time today. Give us a quick run through of what you are making. What's your first sense right off the bat of these AMFI numbers that we're seeing today? Because as my colleague Sharad was pointing out, sectorally, we have seen flows that are down 59% and small cap fund inflows are also around 23% month on month. What picture is this giving you of what the sentiment is right now?
Good afternoon. Thank you for having me here. So yes, as Sharad mentioned, if you see on a month-on-month basis, there is an outflow, and there's a lower inflows in the large cap segment. But even if you see on a large cap side, large cap is generally receiving around 2,000, 2,200 crore kind of inflows. But in small cap, we have seen, I think, around 4,000 crore kind of inflows. I would say this is one. There are two, 3 points to highlight. One is that the continuous flow reflects the earning strength of the people in the economy, the kind of savings which we are seeing and which is getting flown into the market. Also, we have seen continued interest across the participation from the equity side. While we have seen the equity market, the cash flow loop on the retail side is going down, but there is a reasonable amount of flows coming from the mutual fund side. So basically, the investment is getting more institutionalized, at least on the retail side, that we can see. In terms of flows, again, Shahid also pointed out this flexi cap is still seeing a reasonable amount of flow. I think almost last month it was around 7,500 crore. This month is also around 4,000 crore kind of number. So this reasonable flow, I should say, and decent growth on a longer tenure basis. I should continue to maintain that. Yeah.
Indeed, but Mr. Toshniwal, help us understand that what are you making of the outlook with respect to the SIP numbers, because of late a lot's been happening in the markets in terms of the triggers. The markets are getting excited. But do you believe that though we have sustained above that 28,000 crore mark, we are likely to build on to this number in the upcoming months?
When we're focusing on 28,000 crore number for this month, we also, if you look at the data on a 6-month, 7-month basis, and we particularly focus on the number of SIPs getting into and what the number of getting closed. So if you notice somewhere around Jan to March, there were negative flows in negative, which means discontinuation were more than the new additions. That trend has reversed and that trend has continued to go up. I don't have this month's data point as such, but even if you see last month data point also, we had continued increase in terms of the new SIP role or new SIP enrollment which is coming. And the last which I checked, the SIP AUM was almost 15 trillion number. So that way the things are on track, and this kind of excitement in terms of that, while we are seeing a nominal GDP growth going slowing down, let's say in 8.5 to 9% kind of level, but even if the numbers are stable going, which simply means that even the income level are also reasonably stable, and we are not seeing much of the concerns at least out there.
Prakash, what I read is that while large cap fund flows as well as mid caps have risen 33%, both categories on a month-on-month basis, but what's actually seen outflows are sectoral funds, and small cap inflows as well have seen a dip down of about 23%. Is that really telling you about some uncertainty in the market right now with regards to of course, what sectors are going to do well and what's going to happen to the small cap end of the market?
So the data which we are pointing out is predominantly on the cap basis. So to say, the large caps have, as you mentioned, the large caps have not shown inflows. But even in a thematic and sector inflows, which have seen dip, is predominantly because last month there were a lot of thematic fund NFOs, almost 7,000 crore of additional flow which came. So if you're on an average out basis, almost 2,500 crore to 3,000 crore kind of number, which I can recall. So that way, I'm not seeing much worried about such. Having said that, if we come back, well, market is a function of earnings. What we are seeing in terms of in this quarter also, we have seen a reasonable amount of performance on the earnings side, and especially the earnings was much sharper, much good, I should say, in the mid cap side compared to the large cap and small cap sides as a category. That's what I'm saying. So what we are trying to say, we tend to see market or tend to see across cap, it's predominantly based on the earning growth per se. And wherever we as an investment, we see that earning growth is slowing down at a 10% kind of level, we need to find, we are looking for ideas, we look into segments where earning can go up 12 to 15% in the near term.
Okay, Jaiprakash, great to have you on the show. Thanks for your time today with that quick take on the AMFI numbers. But yes, it's heartening to see that equity inflows, while they have fallen on a net basis after a record high inflow that one saw in July, but they're staying above the 34,000 crore rupee mark. And the subdued numbers were perhaps because of lesser NFO launches as well, and that's the category which has seen a dip. But having said that, if you look at the SIP data, large cap fund inflows, they've seen an uptick of 33%, sectoral fund inflows, while they are down 59%, mid cap inflows as well have risen on a 3% on a month-on-month basis. And flexi-cap fund inflows, they remain pretty strong for a second consecutive month. But Kunal, is that the reading or the pattern in the market as well? Are large caps right now looking the safest bet as opposed to small and mid caps?
Well, it's difficult to say, Aisha, because large caps are the ones which are actually at the brunt of the sharp selling in the last, I think, 10-11 weeks when the markets were going through a sharp correction. So I think in that context, we need to see how the FIs do balance their positions, whether it's a comeback of large cap stocks or whether it's those individual themes which could probably attract the global investors. So I think that could be something to watch out for. We also look out for the coherent patterns. So for example, the likes of L&T, Reliance Industries, HDFC Bank, these are the top three names which have still not participated in the same gusto which the markets have done over the last 2 or 3 days, where the Nifty is now inched back to that 25,000 mark. So I think that zing is missing for many of those large cap names. We'll need to see that element of short covering coming back into these selected large cap names. I think once we start to see that, then we can be of much more higher tilt, that the large caps could make a very strong as well as a durable comeback.
So Neil, that's the thing, right? Like what Kunal was just highlighting, that some of the large cap heavyweight names are still not participating. And I mean, let's pick up the case on Reliance, for instance. Positive announcements coming in from the AGM, still the stock hasn't budged a whole lot and still snapping in a range. And up until the time that you don't have these high weightage names actually contribute, the index as well will not move.
No, I think that's a very nice point. And I would just stress here, adding to Kunal's point, like you said, Reliance, let's look at a few of the affiliates. The point is that the domestic fund managers in each scheme are limited to 10% of the scheme for a single stock weight. And my thing is that if you take a read across the large cap funds and the flexi cap funds, most of the fund houses are already at 9% levels. So their ability to add on these heavyweights is very limited. So when you want a heavyweight to rally, it is those who are not constrained by SEBI regulations. And these are retail and HNI investors, maybe insurance and the FIIs. So that's the reason these heavyweights, because, from that point of view, domestic fund managers can't add of these stocks, even if they are looking good, they're already sitting on them. So it's a very tactical thing there. There's nothing wrong with the way these stocks are perceived. Of course, FIIs broadly, if you look at it, the passive flows account for a significant proportion, and passives buy all the index heavyweights. So when FII flows are coming down, naturally index heavyweights flows are also coming down. So it's a simple, very easy to understand this. And for that very reason, I'm saying if we are going to look at the fact that the tariff scene is going to get better, not worse, if you're going to look at the fact that the domestic economy with the festival season is going to get better, not worse, then definitely I would say that somewhere FIS flows, when they turn around, it is these heavyweights which will get. So that's why to say that today, because of the impact the large caps have had over the past few months, like Kunal was saying, it's today a safer place to play in, because a lot of the mid-cap names, especially consumption-driven, have seen a very strong rally post the 15th August announcement and then the signing of the GST Council. So there's a lot of rally that already happened there. So you're likely to see some profit taking there, and then it will probably get into what is called as the safer space, which you call the large cap. So I agree with Kunal's assessment, and that's where the flows of this month, I was seeing all the discussion around it, and they reflect the maturity of the distributors and the investors, that you see in this volatile period, they have actually increased allocation to large caps. They brought it down to small caps, and they brought it down from sectoral funds. So indicates the maturity of the investor stroke distributor also. And second, for last month's flows, if I may just pitch in there, you're saying that, oh, there's a huge drop, but you take it two things into account. One is that if the previous months, 2-3 months, was only around 25,000 crores, last month it spiked to 42 because the sectoral NFOs spike. So if you take off those impact, it's actually much better than the run rate. Second is, last month was a holiday heavy month. There was Independence Day holiday and the Ganesh Chaturthi holiday. So because of that, the number of days that is there was also less. So I'm not at all worried about the flows. I think they reflect a very strong, maturing and supportive domestic investor. But that's where I want to say that since the flows are mostly in mid and small cap, you can't ignore mid and small cap stocks or sectors at this point in time. So it's better to have a balanced approach across large, mid and small. Large cap because of the FII return anticipated, and mid and small cap because domestic buying is going to be concentrated around that. And the impact of the GST cut is also going to be largely felt in the mid and small caps. Apart from FMCG, which is a reasonable weight in large cap, your discretionary consumption, realty, all the rest of the pack which will get a benefit from the GST cut are largely in the mid and small cap space. So keep a balanced approach to portfolio allocation across large, mid and small. And that's where multi-cap funds as a category, I would say, sound the best, because they have to allocate 25% each to large, mid and small.
Coming in on the allocation front, but just a few minutes left before we shut shop. And apart from IT, one such sector that is doing well, and Kunal, I wanted to have your take on that. That is the defense pack. Look at the move in BEL, Muscat Dock, HAL. They're any which ways flying higher by 2 to 3%. No such big news flow out there, but technically, are the stocks showing some sign of interest coming back?
Yeah, I think so. It started off with the short covering for names like BEL as well as I think Bharat Dynamics, and then I think now we could be looking at these stocks starting to show signs of trends. What could also happen is what's actually happening is that many of these stocks have shown signs of indicator breakout on their daily charts so far. Now this could be a first preemptive indicator that the stocks which are coming out of almost like a 8 to 10 weeks of a consistent price downtrend. And I would expect that if this in case is a major turnaround, then we could be looking at least another 2 to 3 weeks of a consistent upside for many of this defense packs. So it looks to be a very attractive space at current levels.
Okay, on that note, let's begin winding up for the day. And Sunil, good to have you on the show. Kunal, thanks as always. Let me hand it over to Shesha for the closing trades.
Well, yes, we did recover a tad bit in the last half an hour or so, and now Nifty is ending with an uptick of nearly 115 points as we speak, near that 24,980 mark. So yes, clearly turned out to be a good day for the Indian markets. Nifty Bank was also outperforming in trade, ending 330 points higher for the day and ending well above that 54,500 mark. In terms of individual gainers, we had BEL, that one was the star performer in trade today. In fact, Bharat Electronics up 4.5% in trade today, the biggest gainer on the Nifty 50 index. We have Wipro, which is ending with an uptick of nearly 3%, and HCL Tech is also ending with an uptick of nearly 3 to 3.5%. These are all the big gainers from the Nifty 50 index. On the losing side, though, we had M&M. This one is ending with a downtick of 2%. The biggest loser on the Nifty index, followed by Maruti Suzuki and Bajaj Auto. So auto stocks clearly were in slow lane today, and all of these stocks reeling under pressure. IT stocks clearly were on fire. In fact, Oracle Financial Services, this stock was buzzing in trade on the back of very strong reports that Oracle Global Company reported. This stock is ending with an uptick of nearly 10.5% in trade today. Persistent Systems and Coforge also ending 4 to 5.5% higher. On the losing side, as I mentioned, auto stocks were in slow lane. M&M, MRF, TVS Motor, all of them declining anywhere between 2 to 3.5% in trade. In terms of individual stocks, we had textile stocks which were buzzing on the back of that commentary that came in from Trump and Modi with respect to perhaps a deal being signed over the next few days. Vardhaman Textiles up a whopping 7% in trade. We also had Gokuldas Export, Bombay Dyeing, Welspun Living, all of them gaining in trade today. Oracle Financial Services, as I mentioned, the stock ending with an uptick of 10%. Kotak Mahindra Bank on the back of that big block deal that took place today. Remember, nearly 1.62% equity changed hands. So that one is also ending with an uptick of nearly 0.6%. So all in all, turned out to be a good day for the Indian market. Nifty is ending nearly 110 points higher for the day, and Nifty Bank also an outperformer in trade, ending with an uptick of nearly 320 odd points. With that, Shrishti and Snehi, back to you. Taking us through that, before we wind it down on this edition of Closing Trades, just some top headlines. Broad-based gains on Dalal Street as Nifty has closed around that 25,000 mark. IT stocks continue to shine for a second straight day. Broader markets outperform PSB's Boost Banking Index. All key sectors trade in the green, barring auto.
Amid GST rate revamp and easing of inflation rates, Fitch has hiked India GDP forecast to 6.9% from 6.5% earlier. The agency also sees RBI cutting repo rate further in the coming years, with potential negotiations on additional 25% US tariffs on the cards.
Sources tell ET now that Star Health may explore general insurance products before composite license. Star Health, which operates as a SAHI company, is eyeing expansion with the hopes to offset ITC loss due to the GST revamp.
Seafood exports got a major boost. The EU cleared 102 new Indian fishery establishments for exports, which will add 16% more export capacity. But headwinds remain with the 50%
and kept under import alert in the US. Kotak Mahindra in focus as Sumitomo Mitsui likely sold its entire stake. Meanwhile, Yes Bank gets RBI nod for changes in nominee directors. The recently listed Vikram Sola surges on the back of robust Q1 performance.
And a lot of buzz from the primary market as 3 new IPOs hit the street this week. Urban Company, Shingar and Dave Accelerator will test their fates with the investors, as well as 3 IPOs open today.